Welcome back to the channel. We're going over the SP 500, the Nasdaq 100. I did mention literally on Thursday you were going to hit 12.5 and you broke through and went to 12.7. However, we're going to skip the charts for a second because we need to read exactly what Biden said and why this guy has no idea what he's talking about and what's happening with our economy. This is the statement by President Biden on April inflation. This morning's decline in inflation is a sign of progress. Even as we have more work to do, the report showed annual inflation declining and average monthly core inflation at around 4% at an annual rate, down from around 6% in 3 months before it. At the same time, inflation is still too high and Putin's price hikes, again, Putin, that's what Biden wants to blame everything on, continues to impact food shortages and energy prices, which I will agree those are having an effect. There is more work to do in tackling inflation. It is my top economic priority. My plan is to give the Federal Reserve the independence it needs to do its job, lower family costs, and lower the federal deficit. Congressional Republicans have a different economic plan, which would increase taxes on working families and put programs like Social Security and Medicare on the chopping block every 5 years. That is not the way forward to transition from what has been historic economic recovery to stable, steady growth that works for working families. Now, this is neat what he's talking about. He's talking about year to year, data, things like that. Now, year to year data, we know inflation wasn't hitting us quite as hard on all fronts a year ago. So data looking at from a year ago is worthless and it's not going to give you anything. So year over year, you're coming in 4.9%. And overall, all data came out as we anticipated on the inflation side of things for this specific month. It's also worth mentioning PCE is not the biggest core inflation data to watch for. We're having much more coming in, but I don't want to sound like I'm just siding with the bear logic here, because when we get to the charts, I'm going to show you what I think is going to happen. But this is the most important thing you need to look at, and if you take from this video, personal income and personal spending. You already went over the Fed minutes. We've talked about what Powell said, and we've talked about the concerns of a recession. We know that inflation always beats out rising income. Income has never outlasted inflation to the upside, never in history. So on the last month, we saw income actually drop from 0.5% to 0.4%. So people are now making less money over the month, which we can say a month isn't too much. But what we can say is look at consumer spending. It is increasing, people. Consumer spending is increasing while their income is decreasing. Is this a problem? Is inflation running rapid? I don't know. The data just tells us this. However, Biden politely decided to ignore this. Now, they're talking about taxes, things like that. Well, when you are giving out trillions of dollars to every American, you might need to increase taxes down the road or start to hike rates a little bit quicker. Now, going into the charts, this is what I want to talk about. This was, just so you know, pretty bad information, but it's not going to hit you right now. That's the important thing to know. We also went over Fed minutes. I went over that in a previous video. I'm not going to read Fed minutes to every single video. That'd be crazy, and it would just take too long, and people would just get mad at me. But looking at what happened here, the Fed came out and said inflation will be down over the next few months. They basically put their name on it, their lifeline on it, the whole economy on it. They said, look, no matter what, inflation is going to come down, GDP is going to turn positive, yada, yada, yada. That's what the Fed stance was. Now, we can see from data we continue to get, income is lowering, spending is increasing, inflation is here, nothing spectacular has happened, more rate hikes are going to come. But from a technical standpoint, I told everyone, you broke out of this trend, you're probably going to test 12.5, 12.6 immediately in a hurry. And if you look at the Nasdaq, this is a 1 hour chart right here. Look how quick this has happened. Look at that recovery. And it looks right here like you are now getting the same type of recovery you were getting back here. Very volatile. Buyers are in the market. Volume spiking. It's all good stuff. You're breaking the bear trend. It looks good. So ranges we're looking at. But something I want to highlight is going back to previous types of recessions and pullbacks. This is '08 for an example. I'm just going to just have an overall trend that you can see right here. And this lasted for roughly 2.5 years. Now, I don't think this recession will last that long. I want to be very clear. But look at these levels. This is a daily chart now, so you can see you would have months of uptrending, then downtrending back down. You start popping back up. But you had really crazy green days, like right here. You would bounce for almost 2 weeks to the upside, boom, come back down. And if you go back even further, you can look at back in the dot-com bubble and see everything happening the same way. So I do want this to be clear that you can be in a downtrend, but still have great volume to the upside, short covering, and everything like that. What exactly do I think is going on here? I believe you're getting some short covering. I believe you're getting a nice bounce to the upside. Finally, about time, you're getting a little bit of relief, and you expect these. So we had the 12.5, 12.6. Yes, you hit that level pretty nice, and then you went to the upside, and you hit previous lows, which we've talked about as well. These previous lows are going to be major levels. So 12.7, huge area to close that. It's going to be a pretty big wall. But if you get above this region, in my opinion, you got to be targeting the other previous lows you had, roughly around 13.2. But ultimately, that key range we saw back at 13.6 on the Nasdaq. And this was the big daddy. This was the big boy. This is where we saw all the pain. This is where we saw the struggle last time, which led to the massive downside when we finally broke 400 on SPY as well. Going over to the S&P, you can also see you're getting the same type of recovery. Strong volatility, boom, same thing you saw here back in early mid-March. You're getting it right now as well to the upside. And if I'm targeting here, you're hitting once again those lows right here, roughly 415, but you're also going to be targeting this range into next week around 430 if you do continue the upside. So you're going to want to automatically see this range right here, a breakthrough. You need to see a breakthrough beginning very quick into the beginning of the week. If you start trading in this range here, it's very likely as you get in this range, it's very likely you get a quick push up to 428, 430 roughly based on the amount of liquidity in this region. There's not very much, so you'll move very quick to 427, 430 quickly. If you remain below this area, so let's say you come out Tuesday afternoon, Tuesday morning, you're below this region, I anticipate a quick push right back down, 407, 406. The liquidity here, you can also see not very much is in here. So you can see in this region right here, look at the chop here. There's not very much chop. It's quick down and quickly back to the upside if you break above that region. These are the key trading areas you want to keep watching because you saw how quickly you moved through this in just one trading day, all the way from 406 to 415 at the end of that trading session. But it's worth mentioning as well, you just broke that bearish trend and you're pushing back to the upside, trying to get some love and increasingly getting more short covering. It's also worth mentioning it was the ending of a month and you saw a lot of option contracts expiring as well. But you can see this level is very big as we have marked out here as well. So again, going into SPY, what am I looking at? I want to see how you respond to this area right here. Because if you get above it, once again, you're trading it to the upside. You have to be bullish in the shorter term. If you hold below it, you have to be bearish, aiming towards that 406 region. And then you're also watching for more data, because if you get more data that shows inflation's hitting, the market needs more downside, you're going to break below this support quickly and find new lows in a hurry as well. But it's all dependent on how you react to these levels, and that's where you make your money. And again, before I let you out of here, I'm going to go over the Nasdaq one more time. If you get above this region here, roughly 12.7, 12.8, you are going to be pushing 13.4, 13.5 in this region here. If you hold below it, I got to be targeting back down to the 12.2, 12.3 range down here. That's just me. That's my targets. Have a good one, traders.